Alrighty, hey everybody, hey channel subscribers, channel members, channel all the people, and welcome to the stream. Dun, 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 dun. Gotta put my monster back up here. Moved it to get something off the desk here. And welcome everybody. Yeah, happy Thursday, as David says. Looks like we have John, Don, Darren, Sergio, Rob, Rex, Brian, and Arturo Svenborn, all the way from Iceland. Good to see you, Diane. General Rush, good to see you, sir. Dan, Everett, Frank, Ted, Mad. Glad to have everybody. And if you're new here, you're like, hey, how's everybody chatting? Click the button right over down here. Be a subscriber on the channel. A few seconds later, you can chat with me and everybody else on the stream. I don't limit it to just channel members. I let everybody that's a subscriber of the channel chat on the stream. So also just the regular subscribers, Mary, John, Diana, Maurizio, Ruth, good to see everybody as always, Jan, Bob, Michael, Rosalind, and PPI is out and the market just kind of goes, we just kind of shrug it off from overnight, and we can jump into it, talk about it here in a few moments. But as always, we kind of start right here. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I say it, I predict it, doesn't mean it's going to come true. Past performance not necessarily indicative of future results. That's kind of, that's just because we've gotten it right in the past doesn't mean we're going to get it right in the future. It's one of those things when you're making market predictions. And this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. So don't trade stocks, don't trade options, don't trade bonds, don't trade Forex, don't trade futures, don't trade cryptos, don't trade treasuries. There's a substantial risk of loss when you buy them or sell them or trade them, long them, short them. So if you desire some personal financial advice, somebody to tell you what to do, what buttons to push, how to make some money in the market, it's not what I'm here to do. Just here to be like a guide, and I'm not giving you financial advice. I'm not telling you what buttons to push. I'm not even telling you what to get into, although some of the stuff I get into tends to work out pretty good. I get lucky sometimes. So anyway, we have PPI out this morning, which is Producer Price Index, if you have no idea what that even is or what that meant. So we get CPI, which is Consumer Price Index, and we got that yesterday. It was commonly called the inflation hedge, but all those goods and services are produced by producers. So they also put out the Producer Price Index, PPI, right here. And we came in a little spicy on that number right there. Quite a bit spicy, actually, month over month. I don't have the year over year. That's kind of goofy. They don't put that on here. But the month over month came in quite a bit higher than even they were expecting. That usually when we see this come in spicy, and it's not that spicy compared to back here, we don't have a consistent theme going on yet. But when it comes in spicy, that tends to precede those prices of those produced goods hitting the market by 3 to 6 months, roughly. So when producer prices increase, 3 to 6 months later, consumer prices usually follow suit. So that's one of these things to keep an eye on. That's why it's important to watch this number also. As you can see, historically, we just kind of chop. We're still within the historic range of chop. It's one of these events right here that we're looking for that might be indicative of outsized continued inflation. One of the big things that could affect that is if oil prices start going higher. That's one of the things I've been watching for and why I'm very focused on oil the last several months. It's just been consolidating down the lows, and we've pretty much emptied out the strategic petroleum reserve. So there's, a lot of people are like, well, Trump needs to drill, baby, drill. And if he does that, then that helps keep prices low, which keeps inflation in check, potentially. We'll see. We'll see what happens. So that's how this all kind of flows together. One of the biggest inputs for the entire economy is fuel cost. If oil, most of our fuel comes from oil. If oil costs stay low, the fuel cost stays under control. But if for some reason it starts getting out of control, starts rising quickly, we don't have a strategic petroleum reserve to offset a crazy ramp. And it's one of those things to watch out for. All right. And glad to have everybody else that's popping in here that I didn't welcome already. Looks like we have Kevin, Gary, Ed, Tom, Chris, and Mark. Good to see everybody as always. Welcome to the show. So that's PPI in a nutshell. Now, kind of talking about oil. I've got something. We talked about this the other day. Somebody said, what about, the way that we've got all these restrictions on Russian oil hitting the market, right? We're keeping Russia under the thumb by preventing them from selling their stuff, selling their wares. Well, check out this right here. This chart, if you will, is container ships. All right, and all these yellow dots are container ships that are side by side. They've been side by side for more than just happenstance. All right, they've been parked side by side for a little bit. They're transferring cargo, and these are ships, oil ships, pretty much, transferring their cargo out the ocean. This is not, this is Malaysia over here, Singapore. This is out in the South China Sea. These ships are meeting up, transferring their load, probably oil, to a different flag, and then continue on. This is Russian oil right here. A lot of it. You let me know if you think this is interesting. I think it's highly interesting. We're talking about hundreds of millions of dollars of oil being transferred right there. It's all happening right there out in the, out of the scrutiny of regulatory eye right there. Think anybody cares about environmental regulations out there? Nope. But also, there's no way to track once it changes ships. Right? That's to me, that's highly interesting. So when we talk about the fact that we've got all this, these restrictions on Russian oil, we're keeping them from doing business. They're finding a way right here. And there's a lot of this going on. I mean, as you can see, every one of those little dots out there. And this was just a snapshot in time. This is happening every day. It's been happening every day. So this is one of those, like, the world finds a way. It's kind of like Trump imposing tariffs, saying he's going to impose tariffs, possibly going to impose tariffs on China, but not Vietnam. So China's going to take a lot of goods and ship them to Vietnam and then ship them to the United States. And, all right. So you want to be, I didn't make the chart. This is from Bloomberg, but this is tankers. All right. It is tankers. It's, so somebody, whoever made it, mislabeled it. This is the best thing I can find right here. I don't have access to the data where this came from. So Captain J, sorry, mislabeled. There you go. The source of this was, has photos and videos of the ships in this area with transferring oil ship to ship. So there you go. It's kind of wild. I think it's wild. Anyway. So, keeping oil prices low. Anyway. That's why the dollar, petrodollar, if you will, is in grave jeopardy, I believe. So, moving on to what's happening today. Market shrugs. We've got that move up. It was pretty spicy. Went well past the resistance zone that we defined yesterday. This is S&P 500 futures right here. Coming up right here. Retraced back to that 15-minute. So this is a very key right here. Do we break back down? This low will be important today. We break back down. Probably going back to retest this low. If we break back above this level, right in here, right back at the 60.90, we break back higher, probably going on out to higher prices. So this is the first indication right here. First indication, we're going higher. Got to get the confirmation. It's a potential new trend. Pullback, that would be the continuation right there. So potential, this was a big correction. So potential new trend, a pullback. Looking for the confirmation of the continuation. But if we break down, that's confirmation that the correction is going to continue. So everyone wants to know, what's the one thing that confirms that this is why you have to stay on top of these things. Like there's not just a one flip of the switch that makes the difference. All right. There's always, the market can do whatever it wants to do. It pushed this right up into this resistance right there. Way higher than I expected it to go before it turned down. If we're going to maintain bearishness, if we're going to maintain the downtrend. So this is one thing to watch out for right there. Now, one thing that did happen yesterday, NQ pushed up to that new high. I was saying that NQ was the one spot that kind of looked like we were going to go higher. And in fact, yesterday we did go higher. Made that all-time high for NASDAQ right there. And NQ is the futures for NASDAQ. If you're on TradingView, it's NQ1 exclamation point. A lot of other trading platforms that /NQ. That's how you look at futures. That's where, like, if you're watching CNBC or MSNBC, whatever it is, the news before the market opens, and they're telling you, how the market's going to open. They're getting the numbers from the futures pretty much. And we're about to open in 3 minutes, 2 minutes. So right now, watching NQ. The important thing to watch is this 15-minute roadmap line right here. Testing into it. Market just kind of shrugging. Kind of continued the pop right up into the wee hours, if you will. It was that one started pulling back right at the market close right there. But ES over here. Yeah, we pulled back right in the close, and then we've just kind of been drifting off. We chopped all in the wee hours here. We kind of spiked a little bit and drifted off as we got that PPI news right there. Came in a little spicy, so we got a pop and a drop and a but really, the market's just shrugging. So we've got this area here. Like, what's going to happen? We consolidated here. If we break down, probably heading back to the lows. NQ, less clear on this. We're kind of holding here. This could potentially turn, break back above that level, and take us on up. I saw a bunch of articles about 22,000's a lock this morning. When I say a bunch, it's more than two. Everybody talking about how 22,000 almost guaranteed on NASDAQ. So we might come up shy of that just because the market tends to be like a self-fulfilling prophecy. When it's looking for something, here's the actual cash index. When something's a lock, usually we don't do it. It's kind of funny that way. So watch out for a bigger correction here. Coming up just shy of that 22,000. We'll see what happens. Now, zooming out a little bit, looking at the daily chart here. If we were to extend this big correction, we corrected back here. In case you don't remember, August, it was kind of a bloodbath a little bit. We're up at the target for that correction. We could extend it up to 23 right here. And 22,976. Usually, right here, we came up, we hit the super conservative target, retraced, popped up. Now we hit the conservative target, a retrace, and a pop again would be the normal behavior. It doesn't have to go that way. Other possible potential paths are to grind here and then pop. Or that little 4-day thing was the grind and we just pop. There's the market open. Right there. Now, another potential path is when we retrace back to that breakout level, we don't hold it and we come on down further. So it's another potential sitting out there right now. All right. That's the potential pathways for NASDAQ. Russell continuing to be soft, could not break through that downtrend of highs. We tried yesterday, rejected, looking very soft today. This is indicative that we're going to get a bigger flush. All right, we're sitting on that 4-hour roadmap line right here. If and when this gives it up, we're probably going on down to that daily roadmap line. Bigger flush. So I've got my alert set right there. And I kind of expect this to retrace at this point. Not trading for it. That's my primary expectation. Now, I may put a trade on if we start breaking through that 2360 area right there. I may put a trade on because this suddenly becomes much higher probability that we're going to go visit this roadmap line right here on the daily for Russell. You'd be like, how the heck do you trade RTY exclamation point? IWM. That's how you trade it. Right there. IWM is the, it's kind of like SPY for ES, S&P 500. It's kind of like QQQ for NASDAQ. IWM is the Russell 2000. There's other ways you can play it. You can play it with leverage, long, short, all those, all the same things that happen for the S&P, still available right here. So very cautious on a potential rollover at this point. ES is a little bit of a coin flip. NQ still bullish, and Russell pretty much in the bearish camp at this point. Oil rallied up. Cushing tanks approaching bottoms, freaking people out a little bit, coming up back to that downtrend of highs, and pulling back down. Interesting. That just supports the chop on over here. Now, the other resistance above us, if we could break out potentially right up here, if we start doing that, it's indicative that inflation's going up. That'll show up in the CPI, month or 2 or 3 later. We start breaking up higher, it'll show up in the gasoline prices, and then inflation starts rocking, and then the Fed's going to have to raise the interest rates, right? So it all kind of culminates together on the interest rate chart. Talked about this a bit lately. I feel like it's important. There's not much room for slush here, right? They cut, I raised 90, practically 100% expecting a 1/4 point rate cut. Nothing bigger, nothing less. That puts us right there. That's really close to the current market rate. If by some reason, some way, some chance, the current market rate starts breaking higher, guess what? We got to raise rates again. Hidden inflation. This is just the market rate. All right. The blue is the market rate. The orange is the Fed funds rate. Everybody says the Fed sets the rate, but it looks to me like they chase the market rate. And my entire history of trading, they have chased the market rate. They chase it up and they chase it down into the abyss. Hate to break the narrative. That's kind of what I do, right? I point out how the flaw in the mainstream narrative or the commonly held narrative just doesn't hold the mustard. And there you go. Doesn't hold the ketchup or the mayonnaise either. So, watching out for oil to do something crazy, which would lead to higher inflation, which would lead to interest rates going higher so that they can try to curb that, but may or may not be effective, and then we lead to potentially ultimate disaster. Another financial crisis, possibly a greater depression. We'll see. Like I've said a lot of things lately. Now we're getting close, eerily close to when this might all start coming together. Gold took that right back. I got a little spooked yesterday on the silver market late in the day. I didn't like what shaped up yesterday. Just seen some stuff before. Right here, this price action that did this and then did this with this little test in between. All of a sudden, I was like, I'm not feeling so great about this. I actually closed a lot of my short-term silver position. Kept most of my long-term position. And then overnight, get a little blow off top and big flush potentially. This might develop into something worse. All right, if we don't hold right here, same as when we were looking at ES the last couple of days, 4 hour comes into play. Then daily above that. And it's possible the weekly could come into play. That'd be a big flush back down. Got really concerned here that this was setting up an ABC type thing. Let's remove a couple things, remove a couple things, remove a couple things. See how we respected that 618 right there? A little flush, a little pop, hold it. So we grab that 3-point tool, 3-point fib tool, this high, this low, that high, puts us down in this vicinity right here. That's really stupid close to that weekly roadmap line. If that comes up, that can ease on up right there. This could take a little while to get down here. We can meet right there. Some point out here. That could be a long correction. Ugh. So, very cautious on that right now. That this may start grinding a little bit. So, all right. Bitcoin. On the weekly chart, it looks all good. We're just grinding right there. Yesterday, on the spot market, that, I guess it depends on which spot market you look at. I have to turn my drawing tool off to be able to click. That was like daily closes on Bitcoin are arbitrary, but that was pretty much the highest, or at least we tied that one right there. Now we're just kind of churning it. I'd love to see something push on up through this right here. Extend up 110, 115, 120. Somewhere in that zone. I feel like things are going to change pretty big for a lot of crypto miners and stuff. Cost to mine a Bitcoin hanging out around 82,000. So if this pops up in this area, all of a sudden, the profit margin on mining Bitcoin gets pretty crazy. Right up in this area. That could rapidly appreciate a lot of miners higher in a pretty big way. Of course, it's like a self-fulfilling prophecy. When the profit margin goes up a lot, there's a lot more participants start getting in the market, and then the difficulty goes up, and then the cost to mine Bitcoin goes up. It's kind of self-fulfilling on that, self-balancing, I guess you might say. Ethereum, that's a nice potential reversal there. I do like the fact we kind of held that. Potentially going to push out above the March high, 42, 43. Sets us up for the current next upside potential resistance, maybe even up to 46 and possibly the all-time high. Well, yeah, the all-time high back over here, 49. See where we get to. I've got that alert sitting just above that March high. Right there. I want to know when we push through. I'm going to keep my eye on it. I do have quite a few hundred shares of ETHU. If you believe we're going on up on Ethereum, it's a relatively lower cost. Don't have to worry about time frame way to get exposure with a leverage. I'm kind of liking the leverage ETFs lately. Like, I warn about playing them because leverage cuts both ways. You can lose substantial amounts of money if you're wrong. But I sometimes I get lucky, and it's like this one right here. I bought this. I bought a big chunk at 8. I bought a big chunk at 10. I've got like 2,500 shares of this. Haven't bought anything since we went above 11. And that's at 30. I mean, people say you can't make money trading shares. Well, guess what? That's like 400% right there. Almost, for the ones that I bought at 8. Am I playing options on this? No, I'm playing shares. So, where am I buying crypto? I bought it in 2022. That's don't buy right now. I mean, you can buy right now if you're late to the party, you missed out on getting the opportunity back when Bitcoin was affordable. You're like, that's a scam. I don't believe we're going higher. Guess what? The opportunity is back here. We're up like 400%. We have, big opportunity was back here. It was hard to stomach it back there. Bought more in here. Bought more exposure. Bought more exposure. Now we're starting to look like we're heading toward targets. So, yeah, I'm all over the place. I shop around. I believe in no one broker has all my money. A firm believer in that after watching crypto brokers blow out over the years. There'll probably be another crypto broker blowout during the next crypto winter. Almost every time we've had a crypto winter, there's been a broker blowout. Starting with Mt. Gox and continue on through FTX, the last one. There'll probably be more on down the road. Dollar right here, coming up, looking like a 618 retrace. We've got that sitting right there. That zone. If we pop up there, turn down. Watch out for the bigger flush. Right there, NKD. This is interesting. Pushed up above. Now we're back testing on a small time frame here. So I look at this as like global liquidity. You can say, well, that's not what this is at all. That's fine. We have differing opinions. But on that hourly chart right there, we did that classic break above the downtrend, back to retest it. So this is key right here. If we can hold this, break above again, we're probably going to break out of this box and start confirming the move up to 44, which would probably take the U.S. markets with it. All right, this came up, having a real good day yesterday, and then we've been pulling back all night, so U.S. markets pulling back. The one thing the U.S. market's correlated to, or at least seems to be tightly correlated to, 98.9% or something like that, is global liquidity. This is one of the easiest ways to chart global liquidity. There are many, many more difficult ways to do it. Tracking central bank offers and all this sort of stuff. Very difficult ways. Just watching NKD1, that's kind of an easy way. And it may not be the most accurate way. I'll leave it up to you. NVDU. Ooh, look at that. Dividend came out. Holy smokes. 13.88 dividend. Wow. Talk about guess they needed an adjustment in there. Golly. 13.88. Well, that's why that's down. Like, anybody that was in NVDU hoping for a big pop, hope you weren't in options on it. At 13.88 came out, and that's why it dropped right there. Any dividend comes out of the share price. Anytime they pay a dividend. Any dividend. Now, some stocks are able to recover it very quickly. That one, not so sure about right there. NVIDIA itself also experiencing somewhat of a gap down. So I go to the pre-market, pull everything popping $2 or more and dropping $2 or more, build the list. And the list is not very long today. Just throwing that out there. So CEG popping, but probably on a path to go back to the roadmap line. AAPU, another dividend, yeah, 463 coming out on the AAPU. Apple, not really pulling back, but it is hitting the target. So Apple did rally up into the target from this big pullback back here. Roadmap bounce, activated here back in August, and we finally got it right over here in December. Sometimes they take a little while. Beautiful. Hut. Churn and churn and churn and burn and burn and burn. Like I said, if, there's a big if I have to remove the drawings here. If that Bitcoin can pop up in that 115, 120,000 area, suddenly miners become very profitable. Bitcoin mining, one of the highlights of what Hut does. They do have a reverse split in here, so it's on my very cautious eye list. Like, I'm not, like, I closed all my exposure to this. I'm not really a fan of reverse splits and not really a fan of sticking around in something that has historically done that. But the big picture measured balance type target that's sitting here went a little deep, but this could possibly take us up to 172 if this were to play out. Is that absolute crazy? Yeah, absolute crazy. Maybe buy a couple shares and see if you could catch it. Maybe. I'd give it lower than 50% chance of hitting that. While this is a pattern that works and gives us crazy targets, it is not a highest probability pattern to always getting to the target. In here, smaller time frame, we're kind of topping out on this potential 3-wave move up right here. First move up, 3 waves, retrace, 3 waves. Next move up so far, 1, 2, 3. That's looking like a corrective action. Stopping right there can result in a lower low. So the flip side of there's a big potential target, but also on this smaller, more recent price action, smaller time frame price action, we're kind of setting up for a potential bigger down here. At least that potential. Now this could develop into the fact that, this was just coincidence. It looks like 3 waves, and this be a potential 1, 2, and this gets a 3 and a 4 and a 5, and we actually hit those crazy numbers. The market can do whatever it wants to. There's always the potential. Like things got out of hand last halving event, and they can definitely get out of hand again this halving event. Remember, this reverse split in here, these prices, it was never at 60 bucks. That's inflated by 5x right there with the reverse split. So divide by 5, it was like 12 bucks. This one probably, like whenever this finishes this crazy move that it's doing, it's probably going to come back. Like it did it once, probably going to do it again. KRYS. Biotech. Not a fan of biotech. Just, they don't follow the patterns. Like they just do a crazy Ivan and do something different. Sorry, Ivan. Sometimes they just take a left turn at Albuquerque, and if this is going to follow the pattern, that would be kind of what I expect. It's already kicked off the entry back here. Did a very deep retrace here. Coming back up through. Potential to get on up here. DEO. Diego coming up to that resistance at the roadmap line. If we respect it, like we have so many times before in the past. Here, on up over there. Lower low. That's still my expectation of this one until it starts making higher highs, which that's the first one it's got to get through. Then it's got to get through this one up here. So it's got this one, then this one, and it's got to retest support somewhere in here and get continuation to convince me we're going higher. Otherwise, still expect lower down here. That's still the primary expectation. All right, like why would this be done on the downside? And I'm not looking for fundamental reasons. I'm looking for chart reasons. Like there's nothing that tells me this is done. And in fact, it may be indicating we're going lower low than this low back here. Might need something down here to finish this whole thing up. PA, still working on that roadmap line. It's squeaking through. Like we tested into it one day, yesterday, closed right on it. Today, trying to get above it. We need to see that pop up and retest and then move away. And that would be a positive sign that we've made the bottom right here. So this is what I'm looking for right there. I want that. Check. That's what I'm looking for. TRVI. Another biotech. Not really doing anything out of the ordinary. Just chopping. This thing chops a lot. Chop. Not my thing. PepsiCo. Ooh. Beverages are not looking hot right now. I don't know what's going on exactly. Experiencing a correction. Like, I don't know the story behind why. I guess it's, GLP-1 drugs still maybe playing out here. I don't know what reason we put it, but this is just in a correction. Celsius, still in a correction. Monster, still correcting. KO, still correcting. Although that more recently hit the high. So something's up in beverages. I'm not sure what. I guess sector rotation. Like it's just showing that it's an unfavored sector right now, and we may come back into it. But Pepsi definitely indicating that we may see further decline here, possibly down to this kind of level. And when you zoom out even further, it may come even down right in here, that 618. From that big low back here during COVID. It's big high right here last year. Yeah, they keep saying that consumers are strong. This does not look like strong consumers to me. This looks like revolt on the food prices. I mean, honestly, a 12-pack's up to $10 or more for a 12-pack. Are you kidding me? I mean, what the heck? What the heck? Water with a little bit of sugar and flavor added to it. Fancy paint on the packaging. I know it costs money to produce, but even Monsters have gone up. I'm like, golly. What the heck? Food's still inflating. EETH, ProShares, Ethereum. Rejecting the 618 right there. I mean, is it GLP-1? I don't know. Is it? But I tell you, my buddy Big D, Kimberly calls him my old man best friend. He's been on the, I don't know if he's still on Ozempic, but he's been on Ozempic, and he quit drinking so much of he used to, you go in his house, he had like pallets of sodas just piled up next to the kitchen island, and doesn't really have that going on as much right now. He used to drive up the corner store and get a drink a couple times a day. not really doing that as much. That's, I mean, so maybe it's a loose connection, maybe it's not, Sledge. I mean, so yeah, RFK gonna ban high fructose corn syrup. Well, it could hurt them, but maybe not. I mean, I don't know. I don't know. It's all speculation. But you know, looking at looking at it like this peaked out over here. This isn't Trump winning. I mean, Trump won over here. You know, looking at PEP, that wasn't RFK gonna ban. I mean, that's back here in 23. And these, at least the ones I drink, don't have anything in them. They got alcohol sugars you can't even digest. I mean, maybe that's bad for you. I don't know. And Celsius, these have green tea extract that does something weird to your liver on some portion of the population. I topped out back here early in the year. It's just a weird. I think these are going through a correction. This potentially. Now this one's one to keep an eye on right here. This potentially bottomed with a measured bounce. I'm considering building a position because look at that number. That's just the minimum. That could be a 10x right there. And we haven't confirmed anything, but this is one of those opportunities, you know, very low risk. If we break lower, no big deal. Probably risk down to this level. But the upside potential, 10x. Not bad. Not bad. It may work, may not work. I mean, that's... So looking at the decliners, Adobe, I still think this is going down. That looks like A, B, and this is 1, 2, 3, 4, 5 would put us right down in this area for the C wave of the correction. CAR-OS, wow. Why not biotech pharma? Well, there you go. That's why. That had no chart pattern to indicate we were going to do that. So this is why biotech pharma is on my danger list. And I just tend to not to. You know, JT, why don't you trade that? I've learned to not to. FNGU, there's plenty of other opportunity out there without chasing biotech stuff. I mean, just like the way I crushed it on TSLO. FNGU, look at that. Right up to the crazy freaking target. 627. Holy fudge muffins. I wouldn't have expected that, honestly. I don't think I did expect that. When we did this big pullback over here. Absolute insane right there. That move. 694 potential, 900 potential. If we grind through it and make that move up, roadmap line becomes possible. So the high probability trade is done. And we just got to wait for another opportunity on that one. I don't trade that one. It's just too much volatility, too many big swings for me. And I just love SAC. Look at that. Drew that arrow. Head and shoulders pattern. You could say, that's not how you do it. Well, almost played out right to it. 42 on the upside right now. I didn't trade it, but that was also a measured bounce right there. That move up, that retrace, gave you opportunity, just like Celsius. Coming up into the target zone, maybe as high as 62. Then we go up, look at the bigger time frame. I know this did drop. Like it's not absent on me that we're rejecting that red line there. Back to the roadmap line. That's the thing I was talking about on BA, right? Think about it. Zooming up to the bigger time frame here. Look, broke above, retest, we hold it, move back up through, bigger upside, potentially breaking out, going much, much higher. Just zooming out, looking at the bigger picture on Lovesac. Make mail order couches, I guess. Compartmentalized. That was a big measured bounce here on the bigger picture time frame. This low, this high, this retrace. So grabbing the 3-point tool, 0.1, 0.2, 0.3 right there. Look at that number. It's another 10x potential. If we can break out. Crazy. Crazy potential. Might not work. Think about it. You find 10 of these. Maybe 3 of them work out. You make 10 times your money. 7 of them don't. You lose like that money. You lose a chunk of that money. But the 3 that do 10x more than make up for the 7 that don't work out. So that's why I chase these, and when they look pretty darn spicy, then I usually build a position. All right, and then they take a while to work out. Like this one right here, I've been in it since back here on the 23rd. I mean the 23rd, since November of 23. That's pretty nice so far. That's a 3x basically. Almost a 3x. That one wasn't the 10x, but then this one over here, been in since over here, or no, excuse me, since right here. Get my arrow correct here. Been in since right there. Getting a deep retrace now. This might be a sub 1-2, sub measure bounce. Right there, 1-2, 1-2, could lead to a big upside. That's a 7x right there, just to that level, from roughly 6-7x from right here. Not a bad potential. What options you buy? You don't play these with options, all right? These are share type situations. Time frame notwithstanding. So this would be a share type opportunity right here. If it works out. Like it may not work out. Like it may bust down, break through support. We crush the weekly, we crush that, we crush lower low, we come down here and everything sucks. And you gotta know where you're wrong. All right. This is very important to know when you're wrong and cut it. Or when you buy in such a position that you don't care if that goes to zero. That's difficult for a lot of people. Difficult for a lot of people to think about, but I've kind of been the king of doing this. Ever since I started, I bought Red Hat back in 2001, and I can't pull up a chart right now because it's delisted. But Red Hat went from $3 a share when I bought it, or I think it was $3.50 a share in 2001, to when IBM bought it out, $126 a share in 2019, I think it was. Right here, 190 share. 190 share right there. So my $3 shares got bought out for 190, and I sold calls along the way. So my, basically $500 investment, $350 investment, turned into a $26,000 investment. Or when they cashed me out, I had $26,000 in that account. I'd never made another deposit. I put $500 in the beginning. Opened it. That was one of my first accounts ever. Sold calls along the way. Had $26,000 after this acquisition. And that was the only shares I ever bought. Well, yeah. I'd done some other little things along the way. Selling calls was the big way. I got from 19,000 to 26,000. It's pretty crazy. I think it's pretty crazy. So catching one of these, it's kind of, sometimes I get lucky. I got lucky on that one. You catch a few of these 10Xers, sell some calls along the way, come out pretty good. You can let me know if you found that beneficial. Trying to add value to what I say. That's not just the stock market, especially when a short list day today. And GD, General Dynamics, hit those targets, getting that retrace. Looks like that bigger correction coming into play here. Look for support down here around 240. If we start breaking down below that, we're going down bigger. Copart, Corcept, excuse me. That's not CPRT, it's CORT. Out there. Say pharmaceutical on my danger list. Up there at the extension, may get a bigger retrace here. PTIR, like I was talking about yesterday, the risk here is pretty great for a large retrace. And the PTIR, we're basically stuck at that 75. 75 was the target before I upped and put a new target up there. You always need a higher target, right? What do you shoot for above 75? There you go. 107. But that becomes lower probability to get here than it is to do this. And that's almost a 50-50 coin flip right there. And if you're in PTIR, that's like explosively detrimental, 80% downside compared with the upside. ORA, back to the roadmap line. That's a potential opportunity. Utility company, break back through that 618 at 80. Looking for that pop right there. Carvana. I still think this is, I've said it's due a retrace since all the way back here. It's still due a retrace. It's been consolidating. Somewhere over here, I expect it to come meet the roadmap line. And if you're just on it for hope and a dream, that's cool, but it's probably going to retrace before we can break out and get up to these crazy numbers up here, like 700. TECO, 3X Technology Bull, not breaking out and getting that higher move. Like, what was it that? FNGU. FNGU got it. This one not doing that on TECO. Did not get the move up. Caution. We have that big gap down over here. Look, this gap down, sitting there. We're respecting it, not getting through it. DPST. This may flush a little bit, and then we watch out for a turn into the new quarter. I don't know that this one follows the quarterly pattern like FAS. FAS tends to follow that flow into financials because it's the big cap. This is regional banks right here. Regional banks don't necessarily follow the same quarterly pattern like the big dogs. You can see these two charts quite drastically different here between DPST and FAS. Similar, but drastically different. I think we're due a retrace and then regroup on DPST square. We're at that resistance at 100. If we can get through 100, great. If we don't, probably have a date back with the roadmap line somewhere down here. We could just retest the breakouts and then push it on higher. 116 above that there. Then we've got this large resistance right up here. LABU. That's 3x on biotech. So it's add leverage that's already like, it doesn't always follow the patterns. And then add biotech, which is, it doesn't follow the patterns. So that's a double whammy here. And this has just been a choppy sideways hot mess for a while. Full year, at least. Full year right there. And that's the list for today. So thanks for coming. I'll be back with you. Same bat time, same bat channel, 9:15 tomorrow morning. We'll go through, look for what's moving, what's popping, what's dropping, have another conversation. Maybe talk about some other cool stuff. Whatever I find, I'll try to dig up more fun stuff that the mainstream media doesn't talk about. And have a great day, everybody. Stay safe out there. I'll be in Discord hanging out. If you need the roadmap line or you want to come hang out in Discord, links in the description. $5 gets you in there. And I'll see you later.